All right, let's make sense of that. Peter McGuire's going to do that for us from XM. Pete, good to catch up with you on a Monday morning, as we always do. Where would you like to start? Because maybe currencies, seen some dramatic moves there. Obviously, the US dollar coming off the back of that US jobs report, plus speculation about China dropping its COVID policy. What do you see there on the FX market?
Well, good morning, Andrew. I tell you what, last week was dynamic. Friday really captured everything, and it just showed the volatility across the markets. And as you mentioned, copper up 7%, rolling across that US dollar back from 113 to 110. Seems to be giving up a bit of that hot air. So, yes, we might see a little bit further movement, I'd say, over the next, maybe 3 to 4 days. We've got a bit of news happening this week. Midterms tomorrow, and of course the CPI read on Thursday, so I'm expecting continued volatility across the complex.
All right. So what did you make of that jobs report? Because investors seem to be in sort of they struggled to interpret it, didn't they, really? By obviously initially rising and falling as far as equities are concerned. We did have some commentary coming from Charles Evans, perhaps, talking about the prospect of easing, but not now. So that added to the confusion.
Well, exactly right. I want to see, if you look at over the night, it was very, very volatile, and it ended quite strong, and that's been demonstrated with how we're setting ourselves up in Asia for the day. The Nasdaq up and S&P, 1.3% odd. 407,000 has been the build for each month. That's the average in 22, down from 562 in 21. What did we hit? 261,000. So it was softer than expected, and I think that's just the frame that we're moving through. I listened to what Banker Evans had to say, and I think this week, if it's a good read as far as CPI, then I think that'll assist the market tremendously. If it's a bad read like what we experienced in Eurozone, then I think that's really going to put a cat amongst the pigeons, Andrew.
Yeah, all right. So what are you watching out of Europe at the moment, and also with the UK as they obviously prepare another budget?
Well, UK, if you're looking at the 2-year, I've just been looking at the notes, 306, so it's 3.06 for a 2-year in the UK. The US its 2-year is 4.68. So there's a big differential, and then you roll across to Japan at 0.05 negative. So that just, I think when you take on board from a rate perspective and what the UK is going through, the UK is really under the pump as far as the inflation number and weakening economy. So I think it's going to be a very much softer pound over the next month or two leading into Christmas. You're looking at the moment around about that 1.13 mark.
All right, so back to the States, Pete. Now the focus on the politics, midterm elections.
You bet.
How should investors unpack that?
Well, Andrew, I think in some ways you've got to keep your hands very closely on the wheel, because you could see some big whipsawing. But if you're looking at the impact as far as the historical data as per that graph or that chart, and it shows going all the way back to 86 and the performance of the S&P after midterms, that 6-month window, it's normally very, very strong. So is this year going to be different, or this term? And we've just got to see the impact. Everyone's saying it's going to be strong Republican turnout, and I think the numbers will tell the numbers. So ask the question on Wednesday as far as the performance of the midterms, and we'll get a clear indication how it sets up for the rest of the month.
All right. So what else are you watching at the moment, Pete? I guess locally too. Given what we're seeing with commodities at the moment.
Yeah, Andrew, I'm keeping a close eye on energy, and that's going to be profitable as far as mining. You saw that big sweep up as far as base metals on Friday, and iron ore had a jump as well. But we're approaching that $100 a barrel mark. For Brent, we're at 98.60. So are we going to crack 100 this week? I won't be surprised. The move to the upside, if you're talking about China coming back on play, even in winter, and the COVID situation over there. So if that returns as far as a demand picture for base metals and, of course, energy, then you could see that bid up and bid up strongly from here. So it's a time to be trading. Just be careful as far as your stops, and don't be too aggressive.
All right. How are you feeling, Pete, sentiment-wise? What
I feel fantastic, Andrew.
Oh, that's good. Yeah.
The reason, and I say that this year's been incredible as far as volatility, and day traders are and mindful of the huge whipsaws. And I think you've got to be very focused on those little fish are sweet. You never go broke taking a profit. Don't look for too much blue sky, and just be fair to yourself. Get plenty of rest, good wellness, and the market won't disappoint with opportunity.